All right, all right. It is Tuesday. It is 6:31. It is May 16th. My name is Scott Redler. I am the Chief Strategic Officer of T3Live.com. This is the 6:30 Club where I go over some setups. I go over what I'm looking at, what the composure of the tape is, what's their narrative, what are the keys to the day, how do we make some money, how do we position long term, how do we keep ourselves sane. That's a disclosure. Here's the tide chart of the spies. The S&P and the spies, I don't think I've ever seen this tight. Usually I'm like foaming from the mouth when I see a tight pattern like this because I'm like ready for some kind of crazy range resolution. So at this point we'll get over that in a little bit, but let me say hello to some of my dogs around the world first. What up, Atlanta? How you doing, Badger? What up, Iowa? By the way, this suggestion was from my man Peter in Florida, who said the sun's out. It's getting close to summertime. It's time to get a little deep breath in and enjoy the world, and step out of your room, your box, and just friggin' look at things glass half full, because it's a much better way to go through life, right? What up, Long Island? What up, Massapequa? What up, Boston? How you doing? Old school. I think I remember this song in my house. I might have been a little kid, back in the days when I lived in Long Island with my parents, and it's always a good thing, right? Anyway, so where are we at? So on the way in, I saw some things flash on my phone about Home Depot, how they missed results, on how people are taking on smaller projects. Doesn't that make sense? Think about it. 2020, during COVID, everybody had to stay home. So everybody wanted to build their patio. They wanted to add outdoor TV sets. They wanted to redo their kitchens, everything around the house to make their home life experience better. That was 2020 and maybe 2021. And then finally COVID was over. Everyone traveled. They didn't care, what they had in the bank. If they had leftover checks, they all traveled everywhere. Why do you think Wynn and MGM and all those casinos have been doing awesome? Because China reopening and everybody wanted to get out and, do their thing. And now we're in this moment in time when, you have a lot of layoffs happening over the last year. You have interest rates going up. They're trying to squeeze the excess. The Fed's trying to get the world to slow down a little bit so there's less demand and prices go down. And that's how you kind of stem off inflation, right? That's what they want. So for the last 6-9 months, the market has rewarded companies for laying people off, which kind of sucks, and getting more efficient, so they're getting more profitable. And now we're getting to the spot where it's at this equilibrium where we've had, 10 raises in interest rates, and the economy is starting to slow down. And the question is, how slow will it be? So the debate is hard landing, soft landing, etc. So now I think slowdown and bad news might actually become bad news where it used to be good news 6 months ago, depending on how bad. So with that being said, we'll see how the market or the stock market responds. Because if you look here at the chart of the spies, it is friggin' tight. This is the tightest range I've seen for quite some time. Just playing with it. I don't know if it's waiting for resolution of, the debt ceiling, which hopefully they'll stop spending and printing, but anyway, it's not politics. But we'll see. You have a defined range. As a trader, that's all you care about, is a defined range. I was actually just talking to my friend, and I was like, what we probably should do? You probably should buy 2 sets of options. One for this Thursday or Friday, one for the following Friday. So one will cost you a little less, one will cost you a little bit more. Probably go out and buy, this is really, active right here. Maybe go out and buy the 418 calls for this Friday, okay, and buy the 408 puts for this Friday, and then do the same thing for the following Friday. So this way, if you get range resolution by this Thursday or Friday, you're getting paid on both sets, and then maybe you can even turn it into a call spread, and it'll be financed by the movement. Or if we break down, you could turn the puts into a put spread, but some options for this Friday will cost you less for the following Friday if you think we're going to get some kind of range resolution within the next week or two, which I don't know how we get much tighter than this. Even though, this has been going on for 30 days, so I guess they could expand it and bring it back, or expand it and bring it back again. But, my inner feeling is telling me that we're going to get something soon. Listen, you could trade it also. I'll trade it if we start going to the upside and we get above 413.60, 415.54, I'll be buying the SPYs. And if we stay above there and some leaders are leading and things are acting well, I'll get huge. Same way if, all of a sudden, Apple starts to break into the earnings gap and things get weaker and the 8-day gets lost, we'll try and get some size on to the downside. But all in all, it's getting really, really tight in here. If you want to look at some clues, you got the Qs. Qs are really strong. Just literally riding the 8-day, going sideways here. As long as the Qs hold 322, you can't get too bearish. If we happen to take out 327, perhaps you can go to the upside. Starting to see a little broadening out. The IWM's perked up a little bit. It is so narrow. I get it. I get the leadership is so narrow. I'm not saying pick a side. I said buy calls higher for this Friday, next Friday, and buy puts, both sets. One way or another, something's going to happen soon. Okay, but look down here. Here's the IWM. The IWM looked a little bit better yesterday. So maybe, that gets a little bit better. The XLE held the 77.80. So maybe there's a little bit of room there. The KRE didn't go down for a day and perked up right there. So I'm just saying that there is a small chance that we've had the kitchen sink thrown at the market. It hasn't gone down. So maybe it goes higher. And if you feel like you're getting chopped up trying to play stocks and add to it on strength and then it comes in, or press it when it goes down, all I'm saying is you probably could go spend whatever it is you think you might want to spend, risk is premium paid, that within this week to next week, we're going to break out of this range one way or another. You could catch it if you're at your desk, and sometimes you might not have as much size as you want. So, by going out and buying cheap premium, it gives you away. And if you do it while it's in the range, so I've done it in the past where it's awesome. Like just say for this Friday, just to give an example. Some people are like, how do you do it sometimes? Well, just say you go out for Friday and you buy the 415 calls. Right now, the SPYs are sitting here at, just say here's a level 2, down 48 cents. Okay, at 412.5, the 415 calls for Friday are probably like $1.50. If we ignite today, Wednesday, Thursday, and get to 417, these 415 calls will be $2 or $3, and then you could probably sell the 418s or the 419s for what you bought the 415s for, and then hold it, and then it gets called away, and you made 3 times your money. Or if you think we're going to go to the downside, you buy the 408 puts. They're probably $1.50 or something, and then all of a sudden you get a break, and then instead of selling them for 2.5, you then sell the 404s so you can catch this. So sometimes when you buy the one side of if they go straight calls, straight puts, and then you get the move, you could turn it into spreads, and it's financed by the actual movement. Just a thought. Listen, do what you want to do. Anyway, I have all these level 2s. It helps me when things are moving around, and that's my 5-minute chart. So anyway, we'll see. We'll see. Obviously, we're not in the perfect world. It's lots of different bull-bear debates, but I'm not going to get into that. Some other things that I'm looking at that could give us some clues. Listen, Apple's been really lethargic. Apple's been just sitting here. Some people like, hey, Red Dog, it's only because Apple's been trending and it's been in such a great trend that it's taking time post-earnings. I'm like, okay, well, it's still hanging here. There really hasn't been any catalyst since earnings. I think there was some news that in one of the filings, Buffett bought more. Maybe that'll help. But either which way, as long as it holds 170, 76, 171, it's acting well. And then at some point, maybe it gets going. That would give you some clues to the upside. If it breaks and closes below 171 and gets into this gap and starts heading lower and becomes choppier, then that'll tell you that we're probably going to the downside, right? Those are some clues. Microsoft also. It's getting really tight again. So when Microsoft gets tight, you want to take a look there because potentially if it starts to get going again, you could catch direction. Right now, Microsoft's been a go-to name prior to earnings and after earnings. What do I mean? Well, it gave us a great trade prior to earnings, and then after the day after earnings, you could have bought it, got through here, and continued. So now, as long as this holds 306, it looks pretty darn good. So that'll give you some clues. If it starts breaking down, you know we're not going to the upside. If it starts perking up and going through, you know, hey, maybe maybe Microsoft's going to lead again. Amazon's been acting better. Nice little bull flag. I bought more yesterday. It seems like it could be on its way to 121. It's been horrible. Amazon's been horrible for a year and a half. But we're market timers, and perhaps it's getting a little bit better in here. So if you remember last week, I got really big right around here, maybe a lot of money, and now it's consolidating. So maybe there's another move. Also has to get through this 114. Same way we did with Google. Google was fantastic. Got really, really big right here around 106, and now it probably needs some time because it's too extended from the 8-day. But anyway, these are just some things that if you're not worried about the debate about the debt ceiling and the recession and rates and this and that, and you're just looking at technical setups, these were good ones. As far as Tesla, I'm trying to do a lot less there. It's very choppy. It's not special. I did buy it the Thursday. Remember Thursday, I heard the news. Oh my God, a new CEO of Twitter's coming in. We thought it was going to be in 2024. It's 6 months early. Maybe it's good news. Well, it was good to have it overnight, and then they failed it. So right there, that all the active guys said, if we can't go up on that, I don't know what it's going to go up on. And then today, he's going to be speaking with Faber. I don't know what he's going to say. And I think he has something else going on. But either which way, not like this when it was fast and furious. Not like 2 years ago. Tesla's been broken, and it's been a tactical trade just like everything else. And this little outside day where it filled the gap at 177 and then failed was a better short than a long. But if you came in with it, you made some decent money. So anyway, a whole lot of nothing here. It needs to rebuild. It's not where the action's been whatsoever. I did buy two things yesterday that, we'll see if it continues. Listen, AI was really good to us. AI, I picked this earlier in the year down here, and then I think I was away at some vacation. I bought a lot of it in here, sold some into there, had a little left over. Then the news from Hindenburg came out because they were short and they were caught and saying whatever they were doing was inflating the earnings. And P.S. Siebel, the CEO, came out as like, we have an independent, auditor. It had a huge volume, went through. What's this high? 24.31. We'll see. We'll see if it gets better and what the story is. All I know is yesterday was a nice day to be long it. It closed pretty well. It's opening down a little bit. I will probably buy more if it goes red to green. It could probably take out this 24.31 and see a move to here, and then who knows? Maybe get better again. This was one of the initial stocks there. UPST, actually I remember this one too. UPST, I was on a Ragnar race in Texas. Made a lot of money with this one, back here. I remember this so well. And it was in Texas. I was running through the night. I had a lot of on. I sold it, and then all of a sudden it failed. And then right here, I'm like, guys, it's done. And I was at 352. This was 2021. Goes to show you, look what happens when you break the 8-21 day. Look what happens when you have a false breakout. And then it was done. Then you had a big gap down that never got filled that showed you the direction of that gap should be to the downside. So P.S. Where are we now? Here are we now. This is where we're now. With this, you had a gap up post earnings, which was pretty good, and then it just took out the post earnings high right here. News is that somebody bought a bunch of their. You could look it up yourself, but basically like $4 billion worth of something off their balance sheet, and I had a nice strong day on volume. So I'm long some of this. There's a reason for it. The reason is it was a big day on big volume. Chances are, down 40 cents or so, right? UPST. Chances are, you could probably play it red to green and get you a little push right here. So that is also something else. So we'll see. As far as the names we know, the names that have been great, AMD was probably one of my best buys on the dip yesterday. Everyone would tell you in the alpha team. I don't know if I went over it yesterday at the 6:30 club, but I'm like, hey, we get into the 8-day. A lot of guys bought a lot when it went through 91.60, went to 99. Let's target buying the dip around 93.68. And look how nice that was. Now it probably needs some time, and then who knows? Maybe it gets going again. That would also give us some clues we can go higher if AMD starts to get through there. Plus, NVIDIA, look at NVIDIA, poked its head there, perked up, perky. It's been the leader of growth in AI, chips, etc. I don't think I've ever heard Kramer name it. No, I'm kidding. Anyway, this was yesterday. It held above Friday's low, perked its head up. It's down 80 cents. It was up 6 yesterday. Not a big deal. Maybe this goes red to green and then takes out, 289.69. 289.69 is that level, 289.69. So I own this too, and we'll see if we can add to it for it to get above yesterday's high, and then 292.20. We'll see. So there are some setups here, and again, like I said, the SPYs are super tight. The Qs are still acting well. Yesterday, the market broadened out just a little bit. We're still waiting to hear, a little bit more on the debt ceiling. Some Chinese names are up. I have no interest, and we'll see how it goes. Which BBAI and stick with the leaders. Everyone's always looking for the little guy that's up 150%. Stick with the dog that's barking. The dog's got to bark really loud for those tails to wag. So if you think that BBAI is gonna make you rich, it's not gonna happen. But maybe there's a trade there. I get it. BBAI done a whole lot of nothing. If all of a sudden today, AI goes from red to green and goes up another few dollars, hey, maybe this wakes up. But again, the second, third, and fourth tier stocks do not wake up unless the first tier stock is probably making higher highs. Then people go down the food chain. Maybe there's a broken bounce, but I'm saying right now AI had a nice day, but it's got to prove that this is going to continue to the upside before you start going after the second, fourth, and fifth tier AI names, just in my humble opinion. Anyway, what else? This was yesterday. It was just a trade. We had a new issue come out. Some guys like, hey, Red Dog, take a look at it. It's holding in pretty nicely. A lot of companies have not come public. Did a little Red Dog reversal here. So I bought some and had a nice move, and I'm smaller. But, KVUE, I never traded it before in my life. Trader from the Alpha team brought it to me, said, hey, look at it, bought some, added to some, sold some. And sometimes you get a little trade like that. Love it and leave it. Remember those days? That was pre-marriage. Anyway, not when you're married. KV, what's up 8 cents? So I'm saying there's things to do. Look for things to do, not debates on the economy, not debates about the far left and the far right, not debates about the debt ceiling, just about the price action and where you can make money and net it with your tier system and your process so you can get a paycheck. It's May 16th. Okay, hopefully you're doing well. It's been a tricky year. A lot of debate right now, more debate even, not about what the Fed's going to do with rates in June. It's about what's going to happen the second half of the year. And in my humble opinion, here we are sitting in this range. They're not going to be lowering rates with the SPYs above 408 or above here. The only way they lower rates is if we break 408, break 403, head back down towards 380 or lower. So some people think that happens. We'll see when it does. If you look at the weekly chart, very tight also. I drew this the other day, just to give you the weekly perspective. Although we've been in this range for 30 days, we've also been in this range for 2 years, digesting the past decade of movement. So we'll see. Yes, there's a lot of farmer moving around. You guys, some people like SRPT. What a move. Guys from the Alpha team had that. Jose has been all over it. Before we get back to there, this has been really, really tight range. In order to get back to 348, which a lot of people are talking about, a 380, first thing you got to do is get below 403.78 and 398. If we're going to get back to 431 from last summer, got to get above 417 and 418.31, then you have 427. So if this, then that, if that, then this. Do you believe you'll be using blood in the street? I don't know. It's sitting in cash. So, the question is my blood in the street account, because everyone loves to talk about that, because I've done really well with it over the course of the past decade. I put my blood in the street account to work actually here with 2 tiers during the 20% decline. I did 2 tiers here during that also. I actually did like 3 tiers here, 2 tiers here, and now it's sitting in cash. So my blood in the street account, which is my wife's account that she built during the financial crisis back in 2007, 2008 when she worked at UMD&J, that had to stay there because she went into private practice. Anyway, that is only being put to work when there is blood in the street. This isn't blood in the street. We're in a range here. The Nasdaq's 20% off the lows. So with that being said, I don't mind letting that sit in a 3.8% rider for the next year or two, because if we're going to trend and if we're going to break above this area and head back towards the highs, I have a 401k that I put money in every month and a 529 account I put every month. And that means I'm making a lot of money trading because we're in an active sequence to the upside. And instead of being in 4 or 5 names, I'll be in 25. But she'll underperform. But it's a great account to have when things are getting absolutely annihilated and nobody has cash. So it's a great way to net money like I did here, here, and in here. And if it doesn't get put to work, it's okay. That's why you have different accounts. I have a 403b, 401k every month. I'm 50 years old. Those things are going to do so well over the next 15, 20 years because you put every single month. My son's in 8th grade. I should have started his 529 when he was 0. Instead, I started when he was 5. So what I did do is I did add a decent amount here. I went from like $500 a month to $750, and then into here I went from $750 a month to $1,000 a month, and I added some money because sky high university costs. You're gonna need $300,000 by the time the kid is a senior in high school, which is crazy. Hopefully something happens there. But anyway, so lots of different ways to use the markets to your advantage. So every month that goes by that I continue to be the chief strategic officer and I put money here, 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 and the house and the mortgage, everything's being saved for your financial future. And the more you put away every month and not go towards dinner or going out, the best thing I ever did is my best friend went to work for a life insurance company. And when I was 35, he sat me and my friends down and he obviously wanted commission. He talked us into a big whole life insurance policy at age 35. Wasn't easy. $1,450 a month at 35. I'm like, that hurts. He's like, well, don't go to dinner, don't go this. So P.S. It's 15 years later. There's a nice cash value. My son gets a guaranteed, lump sum, and I'm going to try and continue to pay that, and until I'm 55 or 65, because then that cash value is even bigger. That's something totally different. So you got to think about things and prepare for the future. But for today, which is what today is, the SPYs are right now down 50 cents, a whole 50 cents. We're still smack in the middle of the range. And we'll see, can some things go red to green? Can we use our tier system? Can we add to them? And could we continue to maneuver this market in a way that's responsible with keeping our sanity and keeping our process and routine strong? You don't need to be perfect to make progress, just a little progress every day. Have a great day, guys.